Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
We're both fresh from AM Live, aren't we? Well, fresh is probably the wrong word, but we met up, which was great because we
briefly, very briefly,
briefly.
Yeah.
But it was busy, wasn't it? It was a busy show.
Yeah,
lots of people there, lots of familiar faces.
No, it was fantastic. I think it's mine and your, and we should do something else. And we keep saying it every year. We need to get together more often, not just leave it to a sort of a quick sort of hello and a quick catch up at AM Live, but that does seem to work. But no, it was a great event. I mean, it's been a busy week. AM Live is very much back on the calendar now, isn't it? I think obviously after the pandemic slowdown and everything else, but no, it's there is a view that maybe it needs to expand a little bit because it was a bit too tight, wasn't it? It was a bit too busy for the size of it.
It was a different hall this year, but it did feel a little tight around where the presentations were going on, which was great because it gave it a really good buzz. But I agree, it just felt as though it could do with a bit more space there, maybe for next year.
But no, it was great. It was fantastic, and we'll come on to a little bit more about that shortly in terms of what to expect into today's show, and obviously from another interview catch up. But and we've also got the VRA seminar coming up, the annual conference that I chair annually. So we've got 205 people now signed up, which is more than we've ever had before. So thank you to everybody that's signed up to attend. We are getting to the point of full capacity now, which is a good problem to have.
Yeah.
I just hope that the car parking is available and things like that. But no, it's really looking forward to that. That's on the 27th of November down at Warwick University, again at the Slate there. So at the minute, the emails are all going out to confirm parking and things like this. But that's going to be a busy day.
And who have you got on the speaker lineup?
Just to name a few. Friends of the podcast, we've got Martin Beckers, who you'll all know from Auto Chats. They're sponsoring, and Martin is giving us an update as well. We've also we've got Elliot Perks, who you'll know from Jigcar. He's involved with it as well. We've got a bit of a scoop because we've got Mark Smith, who's the used car lead for UK and Ireland for Tesla. And I think you were saying, weren't you? You don't necessarily see Tesla at these kind of events.
It's very unusual. So, that'll be a fascinating session now. And that is on their remarketing, isn't it?
It is, yeah. So that should be good. And we've got a few of the usuals. So David Bailey, who many you'll know. We've got the Bank of England there with Graham Chaplin and many others. So it's very much an event that people are really looking forward to, and quite a bit on EV, battery, health and things like that. And I'm chairing, doing a bit of the interviewing, and also on a panel, which is going to be quite interesting because I think I'm on a panel and then I'm closing the session down. So,
sounds like a busy day.
Sounds like I need to get some rest in the meantime. But thank you for everybody that's involved with that and coming to see us. So it'll be a great event.
Yeah, no, it sounds great. And as you say, 27th of November for that. Now, this week we're joined by industry guru Ian Godbold. We'll have the full interview available actually on your download now, on your podcast feed now, but we'll have an extract from that. And over the course of the full discussion, it was a great time to catch up with Ian because we could talk about the Court of Appeal ruling on car finance sales, the impact of the recent budget that he's seeing on dealers, as well as his take on the latest trend shaping car retailing.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Reuters, Car Dealer, AM, Motor Trader, Auto Retail Agenda, Motor Trade News, and The Times. So as you can tell, we've got one or two stories to cover. So news stories this week cover the car finance crisis, certainly a hot topic at AM Live this week, as well as things like OEM representation plans. And we've also got a dealer acquisition. So starting with FCA urges Supreme Court to act as mega £1 million finance scandal looms. Money-saving expert Martin Lewis warns scandal is moving closer to PPI claim levels, while BMW's finance arm in the UK allocates more than £70 million to compensate customers. Elsewhere in the news, we've got the return of Dieselgate, if you can believe that. Dieselgate returns as the Department for Transport assesses claims that up to 200 diesel models in the UK from various car brands, we don't know who they are fitted with cheat devices. We'll take a look at that one. Plus, we've got the latest on representation plans for LeapMotor's Xpeng and Dacia. And we'll close with a key acquisition from Alan Day.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
I could hear a deep intake of breath across the nation when you mentioned Dieselgate there, Curtis.
Yeah, I know.
But we will get onto that one later.
It's as though we're back in 2015.
Oh, good. But anyway, I think we've got many things to look back on in the future that we'll be talking about for a very long time in Scotland. But we will get on to the latest now. So, as Curtis said there, in Reuters and talking about the discretionary commission situation that's taking place that we covered recently with the High Court judgment. And this is the UK watchdog urges Supreme Court to act as $21 billion shows dollars there. Motor finance scandal looms.
I reckon that's about £16 million between you and me. Yeah.
So this is obviously saying that the FCA to consult on extending the complaint response time for firms, and that the regulator probing misconduct related to the discretionary commission arrangements before 2021 ban. And then obviously the FCA urges banks to consider financial provisions to cover the potential claims, which obviously we've covered a few times, haven't we, since the DCA became the headlines, and that motor finance concerns weigh in on some banking sector stocks. So a lot going on at the minute around what came out obviously a couple of weeks ago now.
Yeah, this is a sort of fast-moving story, and we've been talking about it now for certainly the last couple of weeks. So the FCA had expected to set out its next steps back in September, but on Tuesday this week, it said this would now be pushed back to May next year, as some motor finance firms struggle to come up with data for the watchdog to assess what are effectively thousands of records spanning over 14 years. So this is a mega job, isn't it? That's now going through assessing all those claims.
It is, yeah, and it's quite interesting because it's as you say, it's been a topic of conversation since then. I mean, the reports are that many of the lenders, particularly within automotive, are now back in lending again in the main. They've sorted the systems and the processes and the declarations out to become back in the market again. Interestingly, the reports that some brokers have actually seen an uptick in inquiries because they're looking at brokers as being the impartial advisor on finance away from the dealers, which is quite an interesting point there. But I think, you and I were talking that this goes outside of automotive. I mean, this is about asset lending in general, because it's a significant change. So this isn't just car financing or motor finance, as you might say. This is asset lending, and it could actually get involved with B2B asset lending as well, which is quite an interesting potential impact from this going forward.
Yeah, and there's an interesting comment in this, because this is based on a statement that was put out by the FCA early in the week, and the FCA says our next steps could involve consulting on a redress scheme. This is why we intend to take the precautionary step of pausing complaint handling until the 4th of December 2025, as it may take until then to confirm how firms would implement it. And goes on to say that a redress scheme is now more likely than when the investigation was started, and preferable to allowing uncertainty to continue, according to the FCA. But there's a lot more to play out in this story, and we'll just reference a couple of other stories that have picked up on it this week. The first one from Car Dealer, and the headline there is Martin Lewis says car finance scandal could double in size as FCA extends scope of its investigation. So this is actually, Martin Lewis the previous week actually covered this on his show, but this is all based on a tweet or an X that he put out during the week, which Car Dealer have looked at, and pretty much saying that in response to the news, Martin Lewis said that he had been told that the body's investigation, so the FCA's investigation, had been extended to not only include deals which use discretionary commission arrangements, but also deals including fixed commissions, which I think is something that possibly the industry was aware of, wasn't it?
It was, yeah, and I mean, this was obviously pre the High Court judgment, the case that the whole DCA was playing out with, as you say, that was, where does this sit within the FOS? With the complaints going through FOS and small claims and things like this. But yeah, this is basically accelerated all of that. And I think, to your earlier point, this needs to go to Supreme Court in terms of a ruling, which is obviously what they're trying to work on at the minute. But that might not be until spring of next year before you get to that Supreme Court. Because this is taking it away from regulatory processing to more consumer lending and behaviours in general. So yeah, it's getting a little bit complex at the minute. And obviously, to the previous story there, the FCA are trying to put a little bit of a control on it, a little bit of a dampener on it for the minute until they kind of understand the scope and scale of this, because of the things like with Martin Lewis. I believe before all of this, I think he had 2.4 million downloads of the form.
Yeah.
Something like that.
Yes. Yeah, because this of course goes back a number of months, doesn't it? When it was first flagged up by him on his TV show, and as you say, he produced a template, and that's been downloaded millions.
I wonder what it is now. I do wonder what it is now. Yeah. But following on from that, and we talked obviously previously about Lloyds putting provisions in place, and other banks and other lenders putting provisions in place. But Car Dealer picked up this week that BMW allocates more than 70 million to compensating customers affected by motor finance scandal, saying that BMW have reacted to the FCA review into motor finance industry, and that the German brand put aside 70.3 million to pay potential compensation packages, and that the commitment was made before the controversial Court of Appeal ruling last month. Now, BMW are one of the ones that we named, weren't they, in the story the other week, as being one of the OEMs or the manufacturers that had suspended lending at that point in time.
Yeah, I think it was them and Honda, wasn't it?
Yes, yeah, it was.
Yeah, so this is showing what's really happening behind the scenes, and you can certainly be assured that it's not just BMW and Honda doing it. There will be other manufacturers looking at this very closely and putting aside some form of provision. So I think it's safe to say, Phil, that there's lots more to come on this story.
There is, yeah, and there's an element of findings from the Court of Appeal, the Supreme Court, the FCA, and everything else all to go through. But actually, you can see this from a BMW perspective. There's an element of customer service and customer satisfaction, and looking after their customers as well, alongside of this, is playing into it as well. So, like I say, we'll see what happens. But moving on to the scandal from many years ago is we I think we were doing the podcast at that point in time too.
We were. It's the scandal that won't go away.
The hashtag Dieselgate is back, and as Kirsty said at the start there, that the Times have covered a story saying that dozens of car models may be recalled in new Dieselgate inquiry, saying that nearly a decade after the VW defeat device scandal, 47 different models made by 11 manufacturers are suspected of being more polluting than thought. So I don't think they've declared who these manufacturers are or the models involved yet.
No, they haven't. And this piece was actually the Times had the scoop on this, and it has been picked up elsewhere in the media since they ran the story on Sunday. So what we do know is that some 47 different car models under 20 brands by 11 manufacturers are suspected of having these cheat devices. So the investigation, which is certainly ongoing, comes to light 9 years after the whole Volkswagen Dieselgate scandal, where as we know, the car maker installed defeat devices in diesel models to trick the official tests into recording lower levels of emissions. And what's happened this time around is Client Earth, who are an environmental law group, last year submitted a legal complaint to ministers to uncover how many cars by other manufacturers might have the devices in the UK. And so as a result of that, the Department for Transport has become involved and has actually confirmed it has begun the first phase of an investigation in response to this freedom of information request by Client Earth. But the piece does go on to say that although 47 different car models are under investigation, the scope could widen to actually cover up to 200 models.
Yeah, and probably a bit like the previous story with the DCA, the Discretionary Commission for the dealer network and the lenders within that sector and the challenges that that's facing. This is coming at a point, and they do highlight this in the story, that obviously they're saying that the resulting recalls would be paid by the car makers, which obviously are already facing the cost of working to meet electric car targets, which obviously referring to the ZEV mandate targets in the UK for the move towards that net zero marketplace. So it's there's a little bit more in this story, because it does reference back in 2022 there that VW agreed to pay 193 million to more than 90,000 UK drivers after its 2015 scandal. So sort of highlighting there that the potential scope of the cost to the manufacturers on the potential outcomes of this.
So we'll be back after the break with an extract from our chat with Ian Godbold and the rest of the week's headlines.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
Now, Ian, as we near the end of the year, what are your observations on year-to-date trading that you're seeing across the sector? How would you describe the mood of the dealers you're talking to?
No, I think we're still in a very buoyant market, particularly in used cars, and I think that will continue till the end of the year. Obviously, we know we moved to the seasonality time where it's going to get a little bit quieter over the coming weeks up into Christmas. But I think it's been a very very strong, particularly used car market, and it'll be strong again next year. New car, we know the concerns with it within new cars and how to increase those sales and educate people with EV, but. I think I think it's been a strong market. I think the dealers have been focused on increasing their stock turn, decreasing their days to sell, but also maximising that potential profit opportunities.
And looking specifically at stock turn, are there any notable trends that you're seeing, or are there any best practices that you're actively promoting at the moment?
Yeah, absolutely. I mean, it's. I mean, we first of all, we're in an amazing position that we work in the UK marketplace. The data available from our classified channels and suppliers, I really I challenge anyone that if you don't hit your used car budget, there must be something significantly wrong because the data that's available it allows you to source correctly. Buy right, merchandise the vehicle right, price the vehicle to the desirability of that vehicle, and then handle your leads effectively, you should be hitting your used car budget or your new car budget. The data available is second to none. And I work in some international markets, and that data is not available. That data is not available. We do not know how lucky we are to work in the UK marketplace.
Well, as always, I mean, Ian, fantastic, and you only need to follow him on social media and the work that he's doing and the enthusiasm that Ian has for the work that he's doing. But I mean, it was great to catch up with Ian. I mean, that was just a small extract from our chat with Ian earlier on in the week, and highly suggest one to connect with Ian on social media if you're not already. Very worthwhile to follow his insight and his updates on things, but also to listen to the full interview with Ian from earlier on this week that will be in your podcast feed as well.
Yeah, definitely. It was a good time to catch up with Ian because, as you say, there's so much happening in the industry at the moment. So it was good to have his take on how he sees it all panning out because he's out there with dealers all the time. So do catch the full interview on your podcast feed. Now, Phil, we've got a couple of upbeat stories
Yes.
after the first half, relative gloom and doom. So starting with AM Online, and the headline there is LeapMotor rollout plan targets 50 UK dealerships by year end. So this is pretty ambitious because it's talking about 50 sites by the end of the year. Bearing in mind we're midway through November.
Feels like they might have done something already, unless there's a bit.
I suspect so. Yes, yeah. I should imagine ducks were in place before this particular press release went out, and of course it's all to do with Stellantis. So Stellantis as a global brand signed an exclusive distribution relationship with China's LeapMotor to distribute their vehicles not just in the UK but across Europe. So this is hence the reason they're in a position to say they're looking at 50 retail sites by the end of this year, because they'll all be existing Stellantis sites where they'll allocate space to LeapMotors.
Yeah, it's going to be. I mean, obviously, we've talked about Carlos and Ferraris many times on the podcast over the years, and some of the changes and the the way he does things, and you can't help but being a little bit facetious on this one. That as you say, there are 50 sites by the end of this year, as a sort of a secondary brand within the Stellantis existing brands, whether that is through your Peugeot, your Citroën, and your Vauxhall, to name a couple there. But you wonder how many registrations will come from this, as for showroom and demonstrator models that will be registered before the end of the year. That will probably they are electric vehicles that will count towards the Stellantis ZEV target. What do you think on that one, Curtis?
Well, they're talking about showcasing 2 models per site, so that's at least 100 registrations before the end of the year, which will be very handy because, as you say, they're all pure EVs. So that will help Stellantis somewhat.
But they do cite that obviously, they by relying on the Stellantis well established dealership and distribution channels, they do expect LeapMotor's European presence is expected to expand significantly, with plans to increase sale points to 500 across the continent by 2026. So very bold ambitions there from Stellantis, bringing that LeapMotors into the market. But if you look at what BYD, Chery, and with Amoda and Jaguar and the speed in which they're doing, and you and I were down, as I said earlier, down at AM Live, and they were on a show there, and we'll talk about that in a minute. But there's a chance that this could work and do what they need to do.
Yeah, definitely. And they do hint at the pricing as well, because I was expecting them to be sort of fairly low-cost models, but they're talking about pricing at around £35,000. So we'll see how that one pans out. And talking of one Chinese brand, and it's a bit like buses at the moment, because along comes another Chinese brand for the next story from Motor Trader, which is International Motors enters official distributor agreement with Xpeng. It is Xpeng, isn't it? It's spelt Xpeng, but it's Xpeng. So, and again, AM Live, because they had one of the models there, the G6 model, on display, which I must admit looked pretty good. I had a good look at it, sort of inside and outside, and it's a nice looking car. So this will be introduced by IM Group, who listeners will know through they've had long-standing relationship distributing Subaru and Isuzu. They used to bring Mitsubishi into the UK, and in more recent years that they became the UK distributor for GWM Aura. So in terms of expertise, IM know how to bring new brands to sell in the UK. So that looks as though that could be a really good agreement there.
No, as you say, I mean, they all look very good. I mean, so the ones on display down at AM Live this week, and obviously they're involved with Goodwood and things like this. But it's very much heating up in that sector at the minute in terms of these Chinese manufacturers coming in. It creates competition. It creates potential, a lower cost of entry for the consumer. And really, with the challenges that some of the retailers are facing, it gives them that additional options, doesn't it, for potential additional revenue and diversification in terms of what they do. So, it's going to be interesting to see how this one starts to evolve over time.
Yeah, and looks those sales will start certainly with the G6 in early 2025. So staying with OEM representation plans and heading over to Auto Retail Agenda, the headline there is Dacia outlines 2025 network structure change. So this is actually quite an interesting one, because I remember briefings from probably getting on for 15 years ago at Renault, when Dacia was first being mooted as a brand that was going to be brought into the UK, and how it was going to be distributed as a sort of budget brand within the sort of Renault network. And now it looks as though the number of retail sites are actually going to be reduced. So within this piece, it says that Dacia currently has 144 retail sites, and is preparing for a change in its network structure in the middle of next year. And this is all according to comments from UK and Ireland brand director Luke Broad. And it says that the brand will move to a hub and spoke structure, and this will result in a 20% reduction in brand partner sites.
Yeah, and quite a direct comment here that the phase out of those we decide not to continue with will be done pragmatically.
Yeah.
Okay. I mean, obviously, I think again, this is, I think probably similar to what we're talking about with LeapMotors there. I mean, Dacia was very much at a point in time, it was a bolt-on to the Renault outlets as a secondary franchise. It's now over time sort of built its own brand in the UK. And obviously there'll be a decision, actually, do you know what? It's stand on its own, but it'll stand on its own with fewer outlets rather than just a bolt onto the Renault side of the business there. So you can see that. I mean, 144 retail sites for a brand of that size and market share is quite high these days. I think it's, you probably would say that that's a few too many. So yeah, I'm sure that this will hopefully, again, similar to the last story there, fewer outlets, bigger share to those outlets that do operate them by default, gives better profitability to those retailers that are representing the brand. So yeah, you could probably guess that this one probably would come in time at some point. But yeah, very direct in their commentary on what they're doing, why they're doing it, and how they are doing it as well.
So we'll finish this week's episode with some acquisition news, and it comes from Car Dealer, and the headline is: family-run Allen Day Motor Group completes acquisition of Kia's flagship London showroom. So this is the acquisition by Allen Day Motors of Hummingbird Motors in Colindale, which is in North London. So the retailer has acquired what is effectively the flagship Kia site for London in the Edgware Road. And this actually opens up Kia to Allen Day Motor Group, because currently they're based in North London, so it makes perfect sense for them to be acquiring this business. But they represent Volkswagen, Skoda, and BYD, so this gives them quite a major entrance into Kia, because as I say, it is a flagship site. It's sizable and it's in a key location.
Yeah, no, it's a great one, because I mean, the Kia brand is just strength to strength, and they have a very good relationship with their dealer network. And you and I remember when they first came into the market, don't you? And they've significantly changed since then. So that's as you say, a great acquisition there by Allen Day, adding that Kia franchise into their portfolio of businesses. But yeah, so that's kind of it for this week. So as I say, please don't miss the interview there with Ian Godbold on your podcast feed from earlier on in the week. And as the discretionary commission continues to play out, we'll try and keep you updated with some of those conversations and updates as that kind of happens there. And we'll see who's the next Chinese brand to announce rollout in the UK, won't we, Curtis?
Yeah, probably an update on that next week. But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.